I'm Michael Foxon. This is the Prospector Podcast, and I have joining me regular contributor Ted J. Butler. Welcome, Ted.
Thanks for having me, Mike. Hope you're well. It's been a couple of months since we've done this, so definitely looking forward to getting stuck in.
Yeah, normally we would have probably done this about a month ago, but you and I have been globetrotting. I've been at investor conferences all over basically the United States and Toronto. And you've been doing mine site visits all over South and Central America. So good on you. And let's take a look at some of those site visits and what you can share about what's happening in the silver markets in other parts of the world.
Sure. Yeah, it's been a busy few weeks. I'm currently in Buenos Aires. Tomorrow I'm in Santiago, Chile. Spent a lot of time in Uruguay, which is not really a mining country. But I've been here looking at silver mines, really, specifically in the Salta region of Argentina, which is extremely pro-mining at this point. Argentina, more broadly, is really opening its doors to investment with President Milei, who just won the midterms quite convincingly a few weeks ago, which really gives him a mandate to get through those pro-business, pro-mining laws that ultimately have been blocked in previous years under the Peronist governments that have preceded him. So that's really exciting. More broadly in Latin America, we're seeing a kind of rightward shift. In Bolivia, we just saw a right center president elected after 20 years of left-wing, essentially dictatorship. And as we know, Bolivia is geologically very promising, high potential. It's not a done deal yet, but it's certainly promising to see that their doors potentially are opening. The new president just went to the United States and I believe met with a few of Trump's administration. So that's exciting. Chile also currently in election season. I believe in early December that the second part of the runoff will manifest itself, and it's looking like there will be a right-wing candidate. I think his name is Jose Antonio Cast. There is a communist running against him, but I don't think that she'll have the sufficient majority. Colombia next year as well. President Petro currently in power, really buddying up with Maduro. He's got his final year of his term, between now and I think it's July. And so hopefully we'll see another pro-business government come into Colombia, which is, of course, another region where geology and gold and silver in particular is very exciting. And also, Mike, I went to Mexico to visit a couple of silver mines, one silver, one gold mine. And interesting to see that under AMLO, there was a lot more anti-mining sentiment. And whilst Scheinbaum isn't definitely opening the doors to mining yet, we're definitely seeing a more pragmatic outlook and a more pro-business relative to AMLO, I feel. So I'm more optimistic on Mexico than I was a few months ago, and I'm liking what I'm seeing in Latin America.
Yeah, I'm definitely more pro Mexico again. Just in this past couple of weeks, they have actually approved the open pit mine for one of our mutual friends, Glenn Jessam at Silver Tiger
Silver Tiger.
Metals. Glenn's been talking about this for the last year since Scheinbaum's been elected that it was coming, and I always refer to it as the waiting for Godot moment, but we always kind of knew he was going to show up in this case, unlike the play. Now Godot has shown up, and I think you're going to start to see a bit more of a flood of permits and exploration start up in Mexico again that had been dormant for the past 6 or 7 years under the previous regime.
Exactly, and I think you're already seeing this in some of the actions of the US government as well. Finally, after that effort from First Majestic and a bunch of other silver mining companies to have silver registered as a critical metal. And that really is a transformative moment because it signals that really governments are accepting that actually we need mining. This is not these AI data centers and batteries, electric vehicles, this green energy transition is not going to fulfill itself unless we have metals mined. And actually, there's just been such a lack of it in these last few decades. That many of these metals are very, very attractively set up fundamentally and from a supply demand perspective. And silver is one of them that I specialize in. I'm sure we're going to talk about that today, and copper's another one. But we're really at the dawn of a commodity super cycle, and gold's led the way with that, Mike, as we know. It's done a fantastic job just reaching above $4,000, which is a number that many didn't even believe would be possible a few years ago. But it made it, and now it's actually silver's turn, what we call the In Gold We Trust report, performance gold, which is the umbrella term that refers to silver, mining stocks, and commodities more broadly. And I really think it's the turn of those assets to kick on in this second leg of the gold bull market.
Yeah, I wouldn't disagree with that. Yeah, the critical metals list has changed. Silver's been added, copper's been added in the United States. There's another one where you would look at it and go, well, why wasn't that on the list to begin with? Uranium got added. There's a third one that you would look at and go, why wasn't that on the list? So slowly but surely, government is coming in around to the narrative that, you know what, strategically, we haven't been, investing in these areas, and demand in reality is, if we don't do something soon, it's going to slap us in the face.
Exactly, and ultimately, I guess that's what I wanted to talk about today, which we segue into the importance of silver as a strategic metal that actually governments and central banks may begin to buy once again. I mean, in the 60s, as you will know, the US had a stockpile of about 3 billion ounces. And, it eventually started to sell that and liquidate that stockpile as silver became less popular as a monetary metal. And then we had the Nixon shock of 1971, and we ultimately that has its roots in the great crime of 1873 as well, which was when silver was legally stripped of its status as money, a legal tender. But I think we're at a turning point today, Mike. I think we're at an inflection point, just as gold was in 2022, ahead of the $300 billion of assets being frozen from the US, the Russian assets that were frozen. And that kick-started Russia's desire to diversify away from the US dollar. Now, gold, in my eyes, is in the long term undervalued, but at this point, it's certainly you could say I wouldn't say it's overvalued, but it's probably fairly valued at this point. And I think now it's silver's turn, and I think not only will the banks be thinking about diversifying into silver and industrial metals, but I actually do believe that the governments will. I don't think it's far-fetched to think that governments will start stockpiling silver once again, just as they did, 100 years ago.
I hear that statement, and I think yes and no. I think yes, the governments are going to, but no, not for the reason that you're thinking that it's going to be a precious metal reason. I think they're going to stockpile it the same way they stockpile oil, platinum, copper, uranium, because they recognize they need it strategically for industry and more important for the defense programs.
Yeah, no, I hear you on that. Let me try and convince you otherwise. I guess I do agree on one side of the point that some countries, depending on their cultural position, will stockpile silver as a strategic metal, and we're already kind of seeing that in Russia, and I'll get to that shortly. But in terms of the monetary side, India is one of the largest silver markets globally. In 2024, it was responsible for, I think, 42% of the global silver jewelry demand, 67% of silverware demand, and 40% of India's total annual retail investment last year was silver exchange traded products. So that's direct investment, right? That's simply saying we believe silver has value and retail investors buying it through ETPs. Last month, the Reserve Bank of India released some new directives, which, as of April the 1st next year, will enable silver to serve as collateral for bank and non-bank loans under the new regulations. Interestingly, Mike, the move locks in a 10 to 1 silver gold ratio for collateral lending. And for me, not only is this the first time that a modern economy has attempted to effectively remonetize silver, but it also values silver at 8 times its current price based on today's gold silver ratio of around 82. For some more context on the news, the initiative, in my understanding, will also extend itself to silver jewelry and ornaments, which means that these would-be borrowers could post up to 10 kilograms of silver or 1 kilogram of gold as collateral for loans up to 2.5 lakh, which is roughly $3,000. We are still waiting for confirmation on the exact terms, but ultimately this policy is expected to cover banks and who are essentially these small banks as well, the backbone of India's credit market. And it's essentially opening the door to remonetizing silver. So whilst maybe in the US they wouldn't consider this kind of motion, in a country like India where there's more skepticism towards fiat currencies, this could be transformative for the silver price's monetary side.
Yeah, India's a bit of a unicorn in that sense. Culturally, they've always believed in gold as a store of personal wealth. So when you walk the streets of India and you see wealthy Indians, they're wearing their wealth in jewelry and generally gold, and that's the way they've operated. When the times like right now where gold gets to be very expensive relative to silver, you will see them transfer that wealth downward to silver. That's part of the reasons it's referred to as poor man's gold. So in India, where gold and silver are a sign of personal wealth, and they have gold statues, silver statues, and things that we don't necessarily covet here in the West. That move by the Indian central bank makes a lot of sense. I don't necessarily think that outside of India and maybe Bangladesh and Pakistan and that general region, I don't know where I would see that kind of move expand beyond those areas.
Yeah. But I suppose we can refrain from romanticizing silver's monetary aspect and look through it an objective lens. And even if you take the monetary side out of the equation, there's enough of a case for these governments and central banks to start stockpiling silver. We already know about the fundamental deficit. And actually, Mike, it's very, very possible that Russia has already been one of the drivers of the silver price through government buying. Last year in September, it announced that it would be allocating about 51.5 billion rubles, which is about $655 million, for the acquisition of precious metals and precious stones, between 2025 and 2027. And under that umbrella, the category of those precious metals and precious stones includes gold, silver, and platinum group metals. They actually said, the Russian Ministry of Finance, I think this is a Kitco quote, the formation of a reserve of refined precious metals as part of the State Fund of Russia will help ensure a balanced federal budget and stable economic development, as well as meet the industrial needs of the Russian Federation in the event of an emergency. Now, I think it's important actually to just segue also into why would they buy silver? Why wouldn't they just keep buying gold? What does silver offer that gold doesn't? And I guess the first thing is valuation, right? We talked about the current 80 to 1 gold silver ratio, which places a huge discount relative to what India are valuing at it, for an example. But it's also that silver has proven itself to be a safe haven in times of geopolitical turmoil. Even better in the short term than gold in terms of certain events. Whether you look at the Iranian hostage crisis in the 1979-1980, whether you look at the Falklands War, Iraq invading Kuwait, Russia invading Crimea, North Korea missile crisis, Hamas attacking Israel, silver responded proportionately larger than gold did in terms of the percentage increases more often than not. Not in every case, but more often than not. Now, of course, in the longer term, gold has proven to be a more stable, less volatile asset. But I think there's certainly going to be a few central banks and governments looking around the world and thinking, actually, silver is a strategic metal. It's the best conductor in the world. It's a proven safe haven. And actually, it's extremely undervalued. And I think that's a pretty attractive investment case to start stacking it.
Yeah, I looked at that Russian decree, and I saw that strictly in the through the goggles of war. Silver is a metal that's used quite frequently in munitions and the war machine. So it'd be important to Russia to have hold of all of that. By utilizing the platinum palladium in the fashion that they were choosing to do, that allowed Russians to basically buy their own platinum palladium, which was being kept off the market in order to shore up their own financial. And same with the precious metals. That Russia themselves is a very large producer of precious gems in the world.
Yep.
And I saw that very similar as the platinum palladium, where they're just simply buying up their own supply.
Yeah. No, I'm glad you mentioned that about the war perspective, Mike, because this is the thing. Silver doesn't need to be a monetary metal in order for the price to rise. Um, we're going to get to it later about the current conflict in the Caribbean between the US and Venezuela, but just for some context for how big silver demand can get in a world war scenario. In World War II, I think approximately 200 million ounces of silver was consumed by the US in 1943. And that was according to the War Production Board at the time. For context, that's bigger than the current annual supply deficit. So that would be of course, not saying it's going to rise to that tomorrow, but it would be hugely substantial if we even got 100 million ounces from military demand. Now, in my estimates, it's approximately, depending on what time of the world we're in and how much military events are occurring in the world, I think there's probably about 40 to 50 million ounces of silver consumption from the military each year. Now, it's totally concealed. And the Silver Institute, which is the best source for supply and demand we have, doesn't exactly identify military demand in that, and that's fine. And you understand the reasons for that. But putting two and two together, that's what I estimate it to be, about 40 to 50 million ounces. And ultimately, if that were to rise to 100, 200 million ounces, that would be transformative. And it may well do if these wars continue to be fought on all fronts. Now, I know we've had a few peace deals here and there, however long they last in the Middle East. And I'm not sure if I think there's been one signed in the Ukraine and Russia, but there's a new one that's popped up in Venezuela. And well, do you want to give me your thoughts on that first, Mike, before I delve into it?
The peace deal in the Middle East lasted 10 days, and they're back to shooting each other. Israel just hit a Hezbollah target in Lebanon again in the last 48 hours. So peace in the Middle East, as it's always been, is a far-flung dream. The United States and Russia has a deal, but it doesn't seem to include Ukraine and Europe, so there's challenges there. We'll see. I would like to be optimistic and think that there's a solution to stop that fighting, but it's hard to say. And Yeah, we've got sabers rattling really hard, not only in Venezuela but over in Nigeria, the United States under Trump wanting to stick their nose in other governments' businesses.
Exactly, and I mean, I can speak better to the Latin America situation, but as we've spoken about in many podcasts before, Mike, a lot of this is some of it's religious, but a lot of it's resource moves. A lot of it is a skirmish for the oil, gold, silver, uranium, whatever these countries have. And it's typically between the biggest superpowers, the US, Russia, and China. And, whilst Trump is framing this positioning of the US military in the Caribbean as a war on drugs, in reality, it's more of a way to hit back against Russia and China's growing influence in Latin America, particularly in Venezuela in this case. It's not, in part, Trump wants the oil, but it's more, in my opinion, that he doesn't want Russia and China to have the oil because, as we know, Venezuela has, 300 billion barrels of oil, which is the largest proven reserve globally. Now, the US does have some kind of foothold there with Chevron, which I believe exported about 250,000 barrels a day of oil in Q1, I think. And I think in Q3 was granted a license, but this is all very unstable. This is not sustainable. It may have even fallen through now, and I need to circle back to it. But there's no doubt that Trump is basically on the brink of deciding whether or not to invade on Venezuela's land, and that could be not only damaging to lives, but also, I guess, if we look at it economically as well, the US debt pile is just going to continue to grow as these wars of finance, and it's going to continue to devalue the US dollar, and it's going to continue to cause gold and silver prices to increase as a hedge against those risks.
Yeah, and as I say, increased military action throughout history has caused an increase in silver. What I found really interesting with this last move in silver, because historically, $50 was kind of the magic number. Silver would hit 50, and it was like touching the third rail. It would retreat very rapidly after that. We hit 50, we went over 50. We did have some retreat, but I wouldn't call it a rapid retreat, and we're back over 50 again already. Do you see us wobbling in this range here for a while, or do you see us breaking through and continuing to climb?
Well, I think we're most likely going to consolidate around the sort of 48, 46 level. I don't think it's going to be explosive in the near term. I think silver's going to need some time to reacquaint itself with these new highs. But I don't think we're going to suddenly plummet below 35 either. The deficit still hasn't been resolved. We're still expected to have one again this year, albeit slightly smaller. The damage has already been done, as I've said many times before, Mike, in terms of the lack of production, especially for primary silver mines as well, because silver is more often than not mined as a byproduct from lead, zinc, or copper mines. And as we know, it takes 10 to 15 years to get a silver mine from inception to production. So even if we start now, it's too late. There are many that are trying to start now and they're, finally getting going, but it's going to take time. And so that means that there will continue to be a dependence on the existing silver that's already been mined. And some of that's on the exchanges. And we're currently seeing a lot of that being swapped between the COMEX and the LBMA, depending on the different arbitrage opportunities that exist. But it's not new silver that's being mined. And then obviously, there's the question of at what price will the silver be recycled? Is $50 enough for people to start picking up solar panels and taking the silver out of it and recycling it? I don't know. I would say probably not. And actually, it's got to be economical for that to be the case. So I still think the supply deficit is intact. I think the demand side, as we've discussed on the monetary side, it could increase from India. On the military side, it could increase as a result of these geopolitical tensions that we're seeing in the Caribbean, in Africa, as you mentioned, and a failure to resolve the conflicts in the Middle East. Solar is not slowing down. We're still seeing the rollout of solar, especially here in Latin America. In Salta, I saw one of the largest solar parks in Latin America in first hand, and it's absolutely massive, bigger than you can see. Totally covers the land, and it's a Chinese operation. So there's a lot of Chinese investment in Latin America, and I've seen that firsthand. But the point is, Mike, that the demand, the supply demand picture for silver remains very strong, very robust, and the foundations have already been set for an ultimately higher price in the longer term. But in the near term, I think there's going to be some consolidation.
Yeah, I can only comment on the solar panel industry here where I live. There was government subsidies towards these panels. The demand to put those panels on your house has exceeded the subsidy limit of the number of houses that they can do. So there's this push and pull that seems to happen every year where, okay, we've got X amount of money to subsidize doing this, and it's being used up earlier and earlier in the year. So the subsidies aren't making it all the way to the end of the year. So if that's any indication of solar panel demand, that's going to be a continuing pressure on the silver market. In past podcasts, you and I have talked about it. I know we've jokingly referred to it as the Monroe Doctrine, but we've talked about history and the Monroe Doctrine as it related to South and Central America. Are we now, with all these elections coming up, and we're seeing more right wing and more pro business candidates leading towards winning these elections and falling into office in a lot of these countries? Is that due to American influence in these countries, or is that just a normal left to right pendulum swing?
No, I definitely think that American influence is probably rife in the region, particularly in Argentina, in terms of the fact that Trump and the US Treasury bailed out Argentina with this 20 billion currency swap and then a further $20 billion investment. And days later, Milei won the midterms in a convincing fashion. Now, I'm not accusing of any sort of malfeasance or election meddling, but I wouldn't be surprised if there were agreements made and persuasive arguments put forth that inevitably impacted the direction of that election. I do think there are a lot of people here in Argentina specifically that are very pro-Milei. Speaking to many people on the street, in restaurants and wherever, that genuinely do believe in the long-term trajectory of what Milei is trying to achieve, which is, short-term pain. Yes, we're going to have austerity, but it's a required solution for us to ultimately, reduce hyperinflation, pay down our debt, and become an investable country again. And I do think that China's influence is definitely still strong in the region, but this year appears to have been a positive one for the Trump administration because they are starting to secure allies strategically for political reasons, for natural resource reasons, and for ultimately economic reasons to remain competitive with China and make sure that they don't take over the entire Latin American continent.
Yeah, we were running out of places to find friends, that's for sure. And Latin America would make a lot of sense for us to be friendly at. Lots to unpack here, and things are going to continue to change. As you don't mention, there's a few more elections coming up here before the end of the year. I think we're going to still could see a little bit of consolidation in the silver space, but these high price silver markets are lending themselves to to industrial demand picking up further, and people looking strategically to secure their supply lines. So,
Exactly, and just one more thing as well, in terms of the juniors, like let's not forget, yes, we've had a nice 100 to 150% plus run up, and some have been advised to take profits. I've taken a little bit of profits as well, but this bull market is not over yet. The all-in sustaining cost of silver miners, I think, is like $19 and $50 silver price. That's a sensational margin. And so that's a really great outlook for silver miners in general. If even if we just stay where we are, we don't need $100 silver. I think one day we'll get there, but we can stay at 50 happily, even 40, and we're still making a lot of money. And that's an attractive proposition to me. And I think the downside risk to go back down to 30 is really minimal.
yeah, and it bodes well for the gold miners as well because their all-in sustaining costs are based on the price of gold. Whatever they get from the silver that's in their mines is bonus money, and when it's worth three times what it was a year ago, it's a win-win-win for everybody in both the gold and the silver markets.
Exactly. I totally agree, Mike. Yeah.
So you get around. You write for a lot of people. If people want to follow your writings and musings, apart from the pages of the Prospector News and these podcasts, where else do they find you?
Well, the best way to find me is Ted J. Butler on LinkedIn or X. That's where I post all my stuff. I cover everything from the silver stocks with Peter Kraut on our Silver Advisor service, to the macro side of things for the Sound Money Report, which is a Substack I just started with Ronnie Sturfler, and geopolitical things as well for yourself and for David Morgan and the Morgan Report. So I do get around. I do have a lot of my fingers in a lot of different pies, but I love what I do, and I'm passionate about geopolitics, macroeconomics, mining, and ultimately bringing valuable insights to people that you won't find in the mainstream.
Perfect. I look forward to your next contribution to us and to hearing more about the mining tours that you were doing in South and Central America. Not a lot of the North American writers make their way that far down south, so it'd be good to see some impact and viewpoints in the future.
For sure. Excellent, Mike. Thank you.
Wonderful. Thanks for your time today, Ted, and we'll try and do one of these just before Christmas again.
Perfect. I look forward to it.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.